Hello everyone. So it's a really very big time. After a long break, I am again back with a video for the preparation of board examination. Now I know that this is the new year and we don't have that much time to prepare the board examination. So in this winter vacation, I just want to make you all to go through the all important parts. That means portion questions from accountancy and business studies to recapitalize for your board examination. So without wasting much time, let's get started. So here on the screen, you all can see this is the worksheet number one dated 7th of January. And let's have a look of this worksheet. It carries few questions of accountancy and few of business studies also. The first question, second one carrying 1 marks each, third question for 3 marks, fourth question for 4 mark, fifth question that carry internal two parts of 6 mark, and then sixth and seventh question for 4 and 6 marks respectively from business studies. So in this way, we all are going to revise both these subjects in a short duration. So let's have the first question. So as you all can see, the first question is, what will be the amount of monthly drawing of the partner if he had drawn, wait a minute. Uh, ah, so if he had drawn a certain amount in each month. So uh, in this question, it is clearly given that the partner had drawn in every month, but it is not stated that uh, either he had drawn in beginning, middle, or end. So in absence of any further information, we have to assume that in the middle of every month. And interest on drawings calculated at the rate 6% per annum amounting to rupees 1620. So in this question, interest is also already given, that is 1620. We have to calculate the amount of monthly drawing of the partner, and four options are available. So let's have uh, the solution part of this question, that what will be the correct answer of this question. So first of all, as we all know that to calculate interest on drawing, the formula is drawings multiply by 12. If months is not given, we have to assume 12 months, then rate upon 100, and finally average month divided by 12. So in this case, interest is already given as 1620. We have to calculate drawing, that means it is unknown, multiply by 12, and rate is given as 6%, and month we have to assume as 6, because in this case it is not clearly mentioned that it is beginning, middle, or end. Or in case if no information is available, we have to assume middle of every month. So 6 by 12. So after calculation, we got to know the amount of drawing, monthly drawing, that is 4500 per month. That means option number B is the correct answer. Now let's move to the question number 2. Yes. Securities premium reserve can be utilized for or to. One blank is given, mention any one. So this question is only for to highlight that the uses of securities premium reserve is very useful and very important question. So I'm just mentioning this question to write down any one use for which securities premium reserve can be utilized as per sections 52 of Indian Companies Act. So I have just mentioning it in this answer key. As you all can see, uh, any of the following will be the answer, and this is as per section 52 by 2 of Indian Companies Act 2013. And these are the 5 uses of securities premium reserve, as you all can know. The first one is issuing fully paid bonus share. Second one is for to write off preliminary expenses. Then third one is to write off expenses of commissions paid or discount allowed on issue of shares or debentures. Then fourth one is premium payable on redemption of redeemable preference shares or debentures. And the last one is for buyback of its own share. So these are the five uses of securities premium reserve as mentioned in section 52 in the Indian Companies Act 2013. So in that blank, we need to write down only any one of these as you remember. So now let's move on to the third question. X and Y are partners in 5:3. They admitted Z as a partner for 1/6 share, which he acquired from X and Y in 2:3. So, as you all know, the language written as which he acquired from X and Y. It refers to the incoming partner, that is Z. Z is going to acquire his share from X and Y. As we all know that X and Y are the old partners and they are responsible to sacrifice in favor of the new partner or incoming partner. So it is clearly mentioned in the question that the new partner acquired his share from X and Y in 2:3. That means this line signifies the sacrifice of the old partner. And it is already given in a specific ratio, that is 2:1. That means clear instruction is given about the sacrifice ratio, which is 2:3. Then in the next paragraph, goodwill of the firm was valued at that time amounting to rupees 2,40,000. That means at the time of admission of the new partner, the amount of goodwill of the firm is valued at rupees 2,40,000. And by using this amount, we can calculate the amount of premium to be brought in by the new partner. But in third number paragraph, something is mentioned about the capital and the amount of premium brought in by the new partner. Jed brought rupees 1,20,000 as his capital money, but could bring only half of his share of goodwill in cash. So it is clearly mentioned that the new partner has contributed rupees 1,20,000 against his capital, but while uh, while calculating the amount of goodwill share, it is clearly written that he has brought only half of his share of goodwill. That means whatever the amount of goodwill he has to brought in, he has brought only half of his share of goodwill in cash. So we need to pass necessary entries in lieu of the above all the transactions, and it carries for 3 marks. So let's have the answers by means the entries of these above transactions. So here it is. So as I already told you all that it is clear mentioned that the sacrifice issue in the question is 2:3, as it is clearly written in the question itself. And then first of all, we need to calculate the new partner share of goodwill. As we all can see, goodwill of the firm in this question is given as rupees 2,40,000. And the incoming partner is having share as 1/6. So it means that the new partner share of goodwill will be rupees 40,000. But as mentioned in the question, he has brought only half of his share. That means out of 40, only 20,000 he has brought, and remaining 20,000 he hasn't brought in the firm. So as per the given circumstance or situation, there will be two entries. The first entry will be for bringing the amount of capital as well as for goodwill. So bank account will be debited because the bank balance has increased. Then two, premium for goodwill, and two, Jet's capital. And as it is given in the question, rupees 1,20,000 for capital and half of his share of goodwill. That means only 20,000 out of 40,000. That means 20 and 1,20,000. That means total bank balance increased rupees 1,40,000. Now next one is to distribute the amount of premium brought in by the new partner. And we all know that we have to distribute the whole amount of premium. That means we have to distribute 40,000 between the sacrificing partner. But in this question, the new partner has brought only 20,000. That means premium for goodwill. And the amount which new partner doesn't brought, that means remaining 20,000, will be debited or charged from his current account by opening his current account, which will be later closed on from his capital account in the firm. So premium for goodwill account will be debited by 20,000 only, and then Jet's current account will be debited or by opening current account of new partner, that is with 20,000. That means altogether 40,000 will be distributed in the sacrifice ratio, and which is already given as 2:3, as we all have seen in the question. And after distribution, this amount of 40,000 in 2:3, it will be 16,000 and 24,000. That means necessary entries have been made for the transactions given in the question. Now we have to move on to the next question, that is question number 4. Now, just because the length of the video must not exceed the limit, time limit. That's why I'm explaining a little bit fast. If some kind of suggestions or improvements are there in the video, you may comment. So fourth question is having two parts, part A and part B. Part A is pre-limited issued 60,000 10% debentures of 100 each at a premium of 20% and repayable at a premium of 8% after 3 years. So in this case, I am covering the topic of entries for issue of debentures with the cases of redemptions, which have overall 6 cases. And I have taken one case which carries issue of debentures at a premium as well as redemption also at a premium. And we know that this is a very important case topic from board point of view. So uh, during this short video, I can take few major topics. So I have taken up this question as a very important and very vital part of the whole syllabus. So just do not ignore it as a simple one or as a unnecessary question, but rather it is a very important question. So this one is the first case, and now let's have the solution. So as you all know that there will be two entry for issuing the debentures in any condition. So the first entry is bank account debit to 10% debentures application and allotment account, which remains always same. And the given condition is the debentures have been issued at a premium. So that means number of debentures, it is 60,000 multiplied by face value. It will become the total amount to be received from the public by issuing debentures. And then if the condition of issue is at par, that means the same amount will be received. If the condition is issued at discount, that means something should be deducted. And if condition is at a premium, then some amount will be added. And in this case, it is issued at a premium. That's why the amount multiplied by face value plus premium of 20%, that will become 72 lakhs. Now, the second entry, 10% debentures application and allotment account, and always keep remind that these two accounts will always have the same value. That means 72,000 will be repeated in the next entry again. And then whenever the debentures are redeemable at a premium, if the question clearly states that the debentures are redeemable at a premium, that means an account will be opened by means of loss on issue of debentures account, which is written here, loss on issue of debentures account debit by rupees 4,80,000, which is equal to 8% of the face value. And then to debentures account, to premium on redemption in lieu of the loss, we always have to open an account that is named that equal to premium on redemption of debentures account, and to securities premium reserve account, because the debentures were issued at a premium. Now debentures will be credited by the number of debentures multiplied by face value, that is 60 lakh. Premium on redemption is equal to loss on issue of debentures, that is 8%, rupees 4,80,000, and to securities premium reserve, that means 20%, is equal to 12 lakh. So in this way, the first case has been solved. Now let's move to the second case. X Limited purchased assets for rupees 25 lakh from V Limited. It issued 9% debentures of 100 each at a premium of 25% in full settlement. These debentures were repayable at a premium of 10%. So let me remind you all that this kind of language in the topic of issue of debentures or shares to the vendors is very crucial and important nowadays, specifically in the debentures, because we know that the shares cannot be redeemed during the lifetime, but the debentures will be redeemable after a certain period of time. And if the debentures are redeemable at a premium, that means an account for loss and issue of debentures will be opened certainly. So now we all can see these kind of question in the paper, practice papers, pre-boards paper, etc. That uh, along with the other topics, that means issue of debentures to public, issue of debentures to vendors, and other topics too, it can also be given that these debentures are redeemable at a premium. So we have to mix up the entry of loss on issue of debentures account along with that topic also. So this is why I have inculcated this topic in this worksheet 2. So this is the solution. The first entry is sundry assets. because it is not specifically written that which assets have been purchased. So sundry assets account will be debited to V Limited, that means the seller, and the amount is written as 25 lakh. Now V Limited account debit with the same amount 25 lakh, and as we all know that the debentures are redeemable at a premium, that means loss account will be debited. So loss on issue of debentures account will be debited, and whenever we open the loss account, then we have to open another account on the credit side, that is premium on redemption of debentures account with the same amount, and then to debentures account, and the condition of issue is at a premium, so issue securities premium reserve account. Now what about the values? First of all, we need to find out the number of debentures that has been issued to the vendors. The amount payable to the vendors is represented 5 lakh. The face value of the debentures is 100 each, and these are issued at a premium 25%. That means we have to divide it by 125, and that's how we will get the number of debentures which have been issued to the vendors, that is V Limited. So 20,000 debentures have been issued. Now the amount of loss. So loss was equal to 10%, and 10% of face value, that means rupees 10. So 20,000 into 10, that means 2 lakh rupees is the amount of loss. The debentures will represent the face value, that is equal to 100, that means 20 lakh. And then securities premium reserve account is 25%, that means multiply by 25, that means rupees 5 lakh. So in this way, we have just solved question number 4th, both the part. Now, let's move to the last question of accountancy, which again have two parts. Now, in the last question, again, in the first part, I have taken a question from shares, uh, which is for entries for issue, entries for forfeiture and reissue. And then in the second part, we have a question from share capital, presentation of share capital. So both are the very important part. And the main objective of my video is to present you all the major topics which may be expected to have in the question paper, and which cover a lot of portion. So that is why I have taken this question, and I have prepared this question carrying two part of 3 marks each for 6 marks. So first part is X Limited forfeited 2000 shares of 10 each for non-payment of allotment money rupees 3 per share and the first call money of rupees 2 per share. The shareholder had paid only application money of rupees 4 per share. So it means clear instruction is given about what is the amount of application money, allotment money, and the call money. So we can find out the number of the value of all the installments, as well as we can compare it with the face value. So we can clearly specify the called up value. So the application money is given as rupees 4, allotment is given as 3, and plus final call is given, or call money is given as rupees 2. So altogether of all these three installments comes rupees only 9. While the face value is rupees 10, that means rupees 1 is missing, which definitely means that the called up value in this question is rupees equal to rupees 9, not equal to face value. And out of these forfeited shares, 1200 shares were reissued at rupees 9 per share as fully paid. Here fully paid word is written, that means we have to utilize the face value here, and then we are required to pass necessary entries for these transactions. So as we all know that one entry for forfeiture, one entry for reissue, and then after forfeiture and reissue we have to make the entry for capital reserve also. So as I have explained you all that we have to calculate the called up money, because all the amounts are given: application, allotment, and call money, and the total of all the three is rupees 9. And while the face value is rupees 10, that means the called up money in this question is rupees 9, and that means also the second and final call money of rupees 1 per share has not been called. And this kind of information is quite missing in the question, and this kind of language of the questions is very important from board point of view. So share capital account will be debited by rupees by number of shares multiplied by called up. Here majority of the students committed an error that they used to multiply these shares by face value, but in most of the cases they got the correct answer, but in few cases like this question they got to a wrong answer. So that means we have to be at most sincere, and careful that we don't need to multiply this here by the face value. Rather, we have to go through the called up money. And in no case, the called up money can exceed the amount of face value. Rather, called up money may be equal to the face value or below the face value, less than the face value. So here in this case, it is 9. So it is rupees 18,000. Then two calls in arrear account, the combined value of all the arrears, that means rupees allotment, rupees 3, and the call money of rupees 2, that means 5. Rupees 5, that means rupees 10,000 has been transferred to arrears account, which is now created. And then the remaining amount is credited to a newly opened account, that is share forfeited account, by rupees 8,000. Now let's move to the next entry of reissue. So first of all, let's have the language of the reissue, what the question suggests. Out of the forfeited shares, 1200 shares were reissued at rupees 9 per share as fully paid. So this line states that rupees 9 has been received at the time of reissue of shares. So bank account will be debited by rupees 9 on 1200 shares, that means rupees 10,800, and share capital account will be created as fully paid, that means multiplied by 10. Whenever it is written as fully paid, that means you have to multiply by face value, whatever the condition it may be. So it will be 12,000, and then the difference comes on the debit side, which will be always transferred to share forfeited account, and if difference arises on the credit side, it will be transferred to securities premium reserve account. And now finally we have forfeited as well as reissued the shares. That means now we need to pass the entry for capital reserve. But before that, as we all know that only 1200 shares have been reissued. So we need to convert or recalculate the amount of credit forfeiture by using this kind of formula, that 8,000 is the amount of credit forfeiture multiplied by number of shares reissued divided by number of shares forfeited. In this way, we can calculate the proportionate amount of reissued shares as forfeited share forfeited account, and then minus debit forfeited balance, that is rupees 1200 in the entry of reissue. That means 4800 minus 1200 is equal to 3600. So the entry for capital reserve is always share forfeited account debit to capital reserve. And I especially request all of you guys, please be careful in this portion, that means to calculate the amount of capital reserve, because the entry never changes, but always we know that we have to be at most careful while calculating these figures, because this value always carry 1 mark. So share forfeited account debit to capital reserve is a entry for transferring the balance of forfeiture account to capital reserve. Now let's have the last portion of this question, which is from presentation of share capital. And again, this is very expected and a very important part of the chapter as well as the syllabus, which carry around 3 to 4 marks. So Jet Limited was registered with an authorized capital of rupees 65,000 divided into shares of rupees 100 each. During the year, it issued 40,000 shares only. Public had applied for 38,000 shares. The company made all the calls. So it is a clearly written in the question that the company made all the calls. That means the face value is equal to called up money. Then one shareholder of 500 shares did not pay money due on allotment and call. So there is a one shareholder having 500 shares who haven't paid the amount of allotment and call, and which is of 25 and 20 respectively. And finally the directors have decided to forfeit the shares. And now the requirement is show how the share capital be presented in the company's balance sheet, and also you need to show the notes to account. As expected in this type of question, two requirements are always there. Presentation of balance sheet, which is a very I would say tiny part, because only this portion is belongs to the balance sheet. As you can see, balance sheet, then a basic format, particulars, note number, current year amount and previous year amount, and which will always start from the side of liabilities, that means equity and liabilities, followed by the first heading, that is shareholder fund. Below that, first subheading, that is share capital. This portion is always remain same. That is why I have stated earlier that it is a tiny portion. And this amount, as you can see on the screen, 37 lakh 77500. This will be calculated by using notes to account. So the major part will be covered under this, that is notes to account. So let's have the explanation part of notes to account. First of all, authorized capital. Authorized capital refers to the maximum capital registered by the company as per the Companies Act. So in this question, it was clearly written that the company was registered with an authorized capital of rupees 65 lakh. So capital is given as 65 lakh, but the number of share should be 65,000 shares because the face value of rupees 100 each was there. So 65,000 shares of 100 each, that is equal to 65 lakh, that is authorized capital. And then authorized capital is written followed by issued capital. And in this question, it is given that 40,000 shares have been issued to the public. That means 40,000 shares have been issued of rupees 100 each, obviously. That means 40 lakh is the amount of issued capital. Now, finally, we have to choose and we have to write the subscribed portion. And we all know that subscribed portion is divided into two parts, that is subscribed and fully paid, and subscribed but not fully paid. So first of all, before writing here that subscribed and fully or not fully, whatever it is, we need to find out something which I have shown in this working area. So just try to get this thing. First of all, we need to find out the subscribed number of shares, which will be equal to applied and allotted shares, by means number of shares applied by the public as well as allotted to the public. So in this case, it is specifically written that 38,000 shares have been applied by the public, and obviously if less number of shares are applied by the public, that means all the number of shares have been allotted to them, if nothing is mentioned. So 38,000 shares has been applied and allotted by the public to the public, minus forfeited shares and plus reissued shares. So the number of forfeited shares is given here, 500 shares, but none of these shares have been reissued, so 0. So first of all, you need to apply this formula, that is number of applied or allotted share minus forfeited shares and plus reissued shares if any. The number of shares after adding and deducting these figures will be known as subscribed number of shares. Then you need to bifurcate that subscribed shares into two categories, that is not fully and fully. So uh, after applying this formula, that is 38,000 is the allotted or applied shares to the public, 500 shares have been cancelled or forfeited, but no shares has been reissued. That means 37,500 shares is now subscribed by the public, and we need to find out not fully and fully paid shares out of these. Not fully refers to out of these number of shares, how many shares have not paid the full amount. That means having some arrears or less number of called up money. But other than that 500 shares, there is no share who has remained unpaid. That means there is no portion which has subscribed but not fully. That means all the portions is belongs to subscribed and fully paid shares. That is why we have to we have to write subscribed and fully paid share capital, and which is equal to 37,500 shares into 100 each, fully called as it is given in the question. That means 37 lakh 50,000, and then minus area definitely will not be there because shares have been forfeited. If shares are forfeited, that means arrears account has been closed, and then plus share forfeited account, balance of share forfeited account. And here we can apply some shortcut formula. We need to multiply the number of shares which have been forfeited multiplied by that amount which has been paid by the shares. So in this question it is clearly written that the shareholders have not paid the allotment money and the call money, which is equal to 20 and rupees 25. Wait a minute, let's have the language of the question so that you all can easily understand. On 500 shares did not pay money due on allotment and call 25 and 20. So if the shareholder did not pay rupees 25 and 20, that means 45 rupees total 45 rupees on his holding. That means out of 100 he did not pay rupees 45. That means he must have paid rupees 55, and that amount which have been paid by the shareholder and the shares have been forfeited, then the amount paid by the shareholder is transferred to the share forfeited account. That is why a shortcut formula can apply. 55 rupees is the paid up amount multiplied by number of shares that has been forfeited, that will equal to 27,500, and the final balance will be equal to subscribed shares and forfeited. After adding the balance of forfeited, that means 37 lakh 77,500, and that value will be transferred in the current year balance of share capital. So in this way, we have gone through all the numerical part, that is accountancy, for 15 marks in this worksheet. Now, there are two questions, as I said earlier, for carrying 10 marks from business studies, and it is really a very big and painful task for me to find out those topics which are really very important from board point of view, and which I can cover in short videos. So I have taken two questions which I feel very important, uh, and definitely in upcoming days I will also take further topics. I will raise those topics which may be very important from rest of the chapters also. So the first question is, that means sixth question of the worksheet. Explain any two economic and two non-economic incentives with the help of examples. So as you all can remind that in the chapter of directing, we have monetary, non-monetary, that means financial, non-financial, or we can say that economic or non-economic incentives. So here it is clearly written that you need to explain any two as per your own choice. Any two economic by means financial or monetary incentives, and two non-financial or non-economic incentives with the help of an example. So I'm not going to explain the whole answer, but I, I'm going to show you the summary of the answer. That means, what are the various financial, economic, or monetary incentives? As you all can see, pay and allowance, productivity linked wage incentives, bonus, profit sharing, co partnership, retirement benefit, and perk visits. So, uh, you need to uh, you need to learn the explanation part of these particulars incentives, and along with the examples in this answer. And there these are the various financial incentives, and you have to write any two of these are the major examples, I would say. Now let's have some examples of non-financial or non-economic or non-monetary incentives, which are status, career advancement opportunity, job enrichment, employees recognition programs, employee participation, organizational climate, job security, and employees empowerment. So as it was asked in the question, that you need to write any two economic and any two non-economic. So I have given you almost seven examples from each of the incentives. So you can take any two of that and can explain with the help of example. Now, the last question, uh, identify and explain. So first of all, you have to identify and write down the name which have been asked, and then you also need to explain what the technique of scientific management. So first of all, you need to remind all the names of the various techniques which have been developed by the expert, that is FW Taylor. So you need to identify and explain the technique of scientific management which violate the principle of unity of command. And we know that unity of command is the principle, general principles of management, which has been given by Henry Fayol. So it is that technique which do not follow the principles of unity of command and follow the principle of division of work. So it is that technique which strictly follow one of the principle of general management, that is division of work, but does not follow one of the principle of general management, that is unity of command. So I think you all may guess the answer. It is functional foremanship, because the work has been segregated as per uh, their knowledge and skills. As you all can see, functional foremanship is having two parts, that is planning in charge and production in charge, and each of the two departments have four specialists in that particular department, that is instruction card clerk, route clerk, time and cost clerk, disciplinarian, and in the production in charge, speed boss, gang boss, repair boss, and inspector. So you will be awarded 1 mark for correct identification of functional foremanship, and remaining 5 marks for the detailed explanation of the technique of scientific management as functional foremanship, uh, in which you have to explain these major parts, that is planning in charge, and then second one is production in charge, having all the four specialists in their area. So in this way, today's video has come to an end, and hope so. Your time, uh, I have gone through a lot of question in your short particular time, and we all can expect then that in upcoming days we will have some more videos, something like that, in which we will have again worksheet of equal to at least 25 marks, having few questions from accountancy and few questions from business studies also. So let's wait and watch. So we will meet in our upcoming video. Till then, take care. Bye bye.